Hello and welcome to Baatchit with Cafemutual. My name is Suhail Chagla and today I'm joined by Aditya Mulki, CEO of Navi EMC.
Hi, Suhail.
Aditya, welcome to the show. How are you today?
I'm good, Suhail, and thank you for having me on the show.
And as you know, we're at the Cafemutual Passive Conference 2026.
Yes.
How are you feeling to be here? How are you dealing with the distributors over here?
Oh, so this is a good forum that Cafemutual puts together wherein we get a single forum where we can interact with distributors who are actually interested in selling passive products. So these are distributors that are customer first in our view, because they are not looking at what yield they are making or what commissions they are getting. What they care about is, and this is majority of the distribution community today, if you go out and meet them, what they care about is what product is right for the client. So if that product, if they are large cap exposure today, if passive is the right way to go, they are okay doing it and taking a hit on their commissions.
Now,
That's very interesting.
Aditya, you're talking of the distributors who have been converted over to the passive side.
Yeah.
What message you have for distributors who are still on the fence, who are hesitant because of the lower commissions?
Yeah. See, if your hesitancy stems from the fact that you believe active investing can still add alpha, you have a different view, which is fair. So there, I have nothing else to comment. But if you're doing it only to optimize your yields, my view would be it's in the long run it won't be sustainable. Investors will become smarter over time and they will figure out, and you will lose your own customers. So don't do that if that is your view.
Okay, got it. And Aditya, I have a question regarding the current equity market. What is your view on the valuations? Do you think investors should dive in right now, or?
Yeah, see, in our view, the current geopolitical environment continues to remain volatile. And I've said this multiple times before also in people that I interact with in the media, that we believe everything, all the ceasefire talks, everything is on very fragile foundations. So we believe the geopolitical tensions, the war precisely, will continue much more longer than what investors are expecting, or much more than what consensus is expecting. So we believe all of that is still not baked into prices. The markets have corrected, although it's only trading at the large cap space is only trading at very little discount to its long-term averages. The mid and small are not even that. So we believe there is still room for downside going forward.
Okay, got it. And we are at the Cafemutual Passives Conference. Regarding the passives industry, what do you think are both the current key opportunities and the challenges present for the industry?
Yes, in terms of opportunities, a plethora of opportunities, because what's happening right now is in India is, for instance, many years back, financials only meant banks. Today, financials mean banks, insurance, NBFC, exchanges, all the asset management companies. So then you have a capital market index. So there are a lot of new industries, the EMS, so Keynes, Sirma, Tech, companies like that. So these are emerging industries, and this gives a lot of opportunities for you to create very good products for customers. First is that. Secondly, there's also a smart beta sort of play which is not taken off in India, which is big in the West. So I believe that is an opportunity which remains untapped in India, and something around that I think the markets will evolve and those products will proliferate going forward. In terms of certain challenges that we can talk about, one is the one challenge that we need to, which is very, very profound in my view, is investor education itself. In terms of investors today, still believe that, let's say if the Nifty is giving you a 14% return, they feel it's bad. And they always would want to invest in an active scheme with the hope that it gives them 50, 20, 25% returns, because they want to compound their money sooner. They want to generate tremendous amounts of wealth in short periods of time. There is nothing in the world apart from equities or investing wherein you just put your money passively and then the money compounds. So the return expectations of investors should be moderate. 12, 13, 14%, 15% return is a very good CAGR over the long run. So in terms of investor education, I believe there is a lot more groundwork that needs to be done. A lot more. And the second other part is the confidence of the true retail investor. If you go to a tier 3, tier 4 city today, they still look at you at mutual fund houses a little suspiciously, because they still don't understand when stock market's correct. They look at their portfolios, they see it's down, they feel like you've done something wrong.
Right.
So investor awareness, in short, just to summarize it, is something that needs to be taken care of.
Okay, understood. I wanted to ask you a follow-up. You said smart beta funds.
Yeah.
Now, smart beta funds, passive investing in general, is meant to be a simple way to invest.
Yeah.
You put your money and you forget. That's what a lot of investors and distributors believe.
Yeah.
Do you think smart beta funds to some extent conflict with this initial philosophy of passive funds? Or do you think they make it too complex?
Yeah, see, it's for a certain set of investors. Now, if you were an investor today, you can keep your allocations very simple in terms of you can have it large cap, mid cap, small cap. That's one way to do it.
Right.
Now, there's another way to do it as well. You say, I'm not concerned about market cap. Market cap is something that you have today defined by some random criteria. Top 100 companies are large cap. It's very random. So what you can do is you can say, I'll take exposure to factors. Now, these factors theoretically have shown to so they make up for a large percentage of the returns. So these are the known and trusted factors in the market: your momentum, volatility, size, quality. So you can, instead of large, mid, small, you can say, I'll take exposure to these factors. And there are certain markets in which factor X will work, certain markets in which factor Y will work. So I believe that the factor invest, although it's difficult to grasp for a retail investor, there is a case to be made wherein you can approach your allocations that way instead of a large and small.
All right. Well, a very insightful answer.
Yeah.
Thank you for that, Aditya.
Yeah.
Now we'll get to the fun part.
Yeah.
I'll ask you a couple of rapid fire questions.
Absolutely.
You can answer in 1 or 2 words, maximum a sentence.
Yeah.
So my first question is, if you weren't a CEO right now, what career would you be in?
Oh, very interesting. So I was always interested in doing something. I was always interested in history. I would have been either an historian or an archaeologist.
Okay, great. And that also ties into your current job. You need to understand history.
Understand history, absolutely.
Okay. The most unexpected place where you've learned an investment lesson
Is in an auto ride. On my way home. It was very interesting. The auto guy told me, so you're going from your office to your home, you're paying 300 rupees today. You can take an auto to the metro station. You'll pay 50 rupees there. The metro ticket is 40 rupees. You'll end up saving 200 rupees one way. So in a day, you're saving 400 rupees. And he just laid out the math to me. How much that is, X amount of number of days you're traveling, 20 days a month. Very interesting conversation. Very interesting conversation.
That's great.
And I was very surprised how the guy thought it. First principles approach. He knew nothing about any jargons or anything, but this is what he knew.
Okay. Well, that's a very interesting answer.
Yeah.
One book, podcast, or mentor who has shaped your thinking the most?
In terms of mentor, Howard Marks.
Okay.
So, and I would highly recommend for someone who's interested in this field to go through Howard Marks' memos, his books. He's the mentor that you should follow. In my view, there are others as well, but Howard Marks has been a big inspiration in terms of books. The 4 Pillars of Investing. That's a fabulous book, and I think it's a good read for someone who's looking to start off their career.
I hope our audience is taking notes to read that book.
Yeah.
Finally, my last rapid fire question is, if SEBI gave you a magic wand for one day, what would be the immediate changes you would make?
In terms of regulations, right?
Yes.
Yeah. There's honestly they have done a good job. Something very minute I would do is, which I think would help, is I would revisit all the active categories that are allowed today. I feel we've been stuck to those categorizations for a while now. It's time to have a relook at them and try to introduce some more categories, because some singular funds, it's not a problem for a small AMC like us, but larger AMCs, they've grown too large for them to give you good returns. So either allow them 2 schemes in the same category or give them the benefit of having more categories. So that's something I would look at.
Right. Well, that's all the questions I had and the rapid fire questions.
Yeah.
Thank you.
Thank you so much for
having me today.
Yeah.
That's it for this time on Baatchit with Cafemutual. Thank you, and continue watching to see many more leaders of the industry.